What's up, guys? We've got a pretty big news event happening at the end of this week that you may not be aware of. I have warned you guys about this before, but it was many weeks ago, and I know that we have short-term memory when it comes to trading. So I wanted to put this video out to remind you again because it is Wednesday and this event is happening this Friday. So we're going to get into that and the current price action as well. Surely you've taken a couple of days off over this holiday period, but if not, I will put out a video on the price action for those who are completely obsessed. Don't worry, I get it. We'll get into what is going on. So be sure to smash that like button and hit subscribe if you're not already subscribed. And of course, turn that bell notification to all. But yeah, basically hit the like button nice and early because it really does help me get my videos around the internet. And that is my goal for 2024, is to really help as many people as I can absolutely nail the bull market this time. So let's get into it. So before I go over this Bitcoin price action, let's talk about this news. That's what you're here for. I am, of course, talking about the options that expire this Friday. If we go and have a look at base money, we'll scroll down to the open interest by strike price, and we're going to change this expiration. Now, the major options expiries are usually on Fridays, so that will take us to the 29th of December. And we can see here that this is actually a very, very large one expiring. We can see the total notional value is 7.55 billion. So we don't really tend to worry too much about options expiring unless that notional value is really extreme. Once we do have something like that, we then want to have a look at the max pain price, which you can see up here. The max pain price is currently 33,000. Now, every time I talk about options, I have to put in this disclaimer, and this video is going to be no different. The max pain price does not mean that price will go to 33,000 by Friday. You don't have to freak out. It does not mean, a big, what's the price of Bitcoin right now? 43,000, let's just say. So a big 10 grand crash is not upon us. That is certainly not what I'm saying. However, what you have to understand about max pain is that essentially what it means is the closer the price can get to that max pain number, the more max pain literally both sides will feel. So the puts and the calls. But that's not always the intention. So there doesn't have to be a wipeout of both puts and calls. So don't worry about that. The main thing is, once we know that there is a big amount of money, obviously, that is something that someone's going to want to collect on. So we have a look then to the calls and the puts notional value. So the calls currently is at 4.54 billion and the puts is at 3.01 billion, meaning that this gives us a bit of an insight into, what people believe is Bitcoin's perceived fair value, with, there obviously being a lot more calls than there are puts. And this article here shows that the options market seems to be leaning towards 40,000 as a fair value estimate for Bitcoin. So Bitcoin currently is sitting at 42,500. Let's have a look at the price action now and see what are the chances of further downside by the end of the week, or is the false move week beginning actually over? I'm going to actually zoom out before we have a look at the smaller time frames. I'm going to zoom out to the 4 hour because the 4 hour is showing something fairly typical right now. And if I zoom right out to where the initial W formation formed, we can see here that this was the W formation that started the recent uptrend from the 25K region. And it's pretty clear here. I mean, we've had such major price action. I have to stretch this out to make it obvious, but we've definitely had our level rises here. That's number 2 there, and that's number 3. And so we're at number 3 now. When you get a level 3 rise at the 4 hour time frame, we can hang around in that top level for a long time, because what's happening in consolidation, as you may know if you watch this channel, is the market maker is building their contracts ready for the next major move. And this is the period of time where we have to exercise extreme patience, because every move that we get taken out of whilst trying to guess is a contract that they get to collect. So what we can see in this consolidation period, and that's been between around 40,500 to around 44,500, we've really been ranging since the 5th of December. But what we can see is where I've circled here these three areas, that's showing us three hits to the high of the week. So the current high of the week is at around this level. I will show you that on a smaller time frame, and we've had three hits to that level. Now, when you trade this particular method, that is considered a strong reversal signal. But there is one more thing we need to wait for before we can confirm a reversal signal. And if we don't get that, then the opposite happens, where we would expect a further breakout to the upside next. So this isn't a we're going up or we're going down video. This is a we have one more thing to watch right now, and that one thing, when it happens, is going to let us know the direction next when we finally break out of this range. So let me explain to you what that is. After these three hits to the high of the week, what we are now looking for is for a higher low to form. So one good sign is that whilst we have these three hits to this resistance level, we have been creating higher lows, and on the 4-hour time frame, those higher lows have remained above the 200 EMA. So these are all the plus signs for a bullish breakout. So far, it's really, really good. However, if we're going to get that, the final thing we need to wait for is a higher low to form now. And what exactly that will look like on this chart is price has created this touch right here and stayed above the 200 EMA. You can see I've got this pink dotted line here at 42,900. That's because currently on the heat maps, there are short orders there trying to short Bitcoin at that level. So it's very, very important, and I'll show you that heat map as well. It's very important that if we are going to break to the upside, those shorts need to get destroyed. So we need to see price break above those short orders that we can see. In doing that, it will also break above the 50 EMA, which is the blue EMA on my chart. And that is also a good sign. If all of that can happen, then you would be waiting for a bit of a retrace to retest that area. And that retrace will create the higher low that needs to follow after these three hits to the high of the week. So if we're lucky enough to get that higher low, that is the aggressive entry, because that is where you would assume that we're going to break out to the upside, and you would take a position on that if you're an aggressive trader. If you're not an aggressive trader, which is, by the way, just a personality thing, there's no rights and wrongs, then you would let the breakout happen initially following that higher low, wait for a retest of that above area, which would be above the high of the week now. And that is where you would get involved instead. So there's always two trade opportunities, which doesn't really get discussed enough on YouTube, in my opinion. There's always two trade opportunities when it comes to entries. One's an aggressive entry and one's a conservative entry. And it comes down to your personality, which one is right for you. So the aggressive entry, if it happens, will be here. And the conservative entry will be the retest. I personally don't like the conservative entry because you don't always get a retest, especially when you break out of a very, very key level like what we have at 44,500. Price might just go, right? And then you're left in that state of fear and FOMO of like, oh, is it going to pull back? And you've waited all this period of time. Now it's done this massive breakout, and you now have to go into a whole new period of time of waiting. And look, if you have the patience to do that, 100% fine. But if you're someone like me, I've learned to be okay with being wrong, as long as I have really good risk management that allows me to be wrong and still be profitable. So if you can manage that, then it's okay to take the aggressive entries, because you'd be in here. Your stop loss just needs to go underneath the first peak that creates that, which this is essentially a W, and you would be assuming a breakout next to a minimum of the next unrecovered major vector candle. So, if you're wrong on that, you won't get the higher low here and your trade will get stopped out. But again, like I said, if you have good risk management and you have a good minimum risk to reward and win rate, then it's okay. You can just reset and try again. So yeah, it depends on whether or not you're okay with being right or wrong. So that would be one trade example. If you don't like that and you're like, no, if I get in on a trade, I prefer it to have a higher chance of being right, then your entry is up here on retest, which then means you don't have as good a risk to reward sometimes. Sometimes you can. Sometimes you can actually have a better one because you can advertise stop loss. But that's, those are the pros and cons of choosing which way to trade. But essentially, this is what we would be looking for if price can stay above the 4-hour 200 EMA. It's very, very positive. If we can break above those heat map shorts that are sitting right here, you can see here at 42,900, there is 910 of them currently, and that is significant. So, if we can't break through that, it's going to give us option B, which is going to give the hint for the downside. So let me explain that one to you next. Now that you understand this bullish setup, let's explain what is going to happen if this ascending triangle is actually going to end up breaking out to the downside. So we have the 3 hits. That is done. We also have the 3 hits on the trend line done. But whilst I said price is above the 200 EMA on the 4-hour, which is bullish, it's below the 50 EMA on the 4-hour, which is bearish. So it's actually a conflict here. And when price is between both of those EMAs, the 200 and the 50, it's essentially a no trade zone, but it's where you start looking for hints of what might happen next. So it's basically the same in reverse now. If this is going to break to the downside, instead of getting that higher low that we want, we would actually be looking for a lower high within this zone. And that would end up looking like from where price is now to come up to somewhere around the 50 EMA, which, as you can see, lines up with the short orders that are currently waiting there. So there are some bears that believe we should head down from here. We would get a rejection from there, and then that should lead to us essentially breaking the ascending triangle and then at least going back down to the support, at around the 40,500 kind of level. And then if we break that, then there are further levels to come. But this could trigger the next level drop, a retrace, the retest now the 200 EMA, a further drop. And essentially, if that were to happen and we started to head down, then we're looking at these unrecovered vector candles here as our future targets. And I mean, look, it could get as nasty as all the way down to the 800 EMA, but we won't do that fear mongering. Let's just trade what we see. And so what we're looking at here is this type of a setup if we were to get that rejection. So the key really for now to know what Bitcoin is going to do next in this ascending triangle is to keep an eye out around the 42,900 area. What you will be looking for when price does reach that is you'll be looking for weakness in the candles if we're to break down. If we don't do that, if there is strength in the candles, we'll break through it, and then you're looking for the retest. Now, I would be watching for that strength and weakness on the candles on a much lower time frame than this, because it's going to help you nail the entry sooner. So let's go and have a look at the 1 hour time frame. Now, the 50 EMA on the 4 hour time frame is the same as the 200 EMA on the 1 hour time frame. So on the 1 hour, we're looking at this yellow one, but you can see here the blue is the 1 hour 50, the yellow is the 1 hour 200, and that short is somewhere between both of them. Essentially, we're under them both. Again, good areas for rejection. I do like that I have trapped traders down here from yesterday, which it could signal the end of the false move week beginning, taking into consideration that Monday was Christmas Day. So we're not going to have a normal trading week because markets were closed, etc., etc. We have to just basically trade what we see. I'm not liking that I don't see a clear W on the 1 hour yet, however, so need to be cautious of that. And that's why I'm not really jumping into anything right now, but that 42,900 is going to be my hint of what to do next. So nothing crazy on the 1 hour. And now I'm going to jump down to the 15. Now, by the time this video comes out, a lot of what I'm going to show you on the 15 minute is going to be well and truly already happened, because I'm filming this at 11 minutes till the end of Asia, meaning UK. We're about to go into a session changeover. These are the best times to get your trades. But Asia has run a typical session, which is good. If we measure out that area, it's a 1% move. Anything under a 2% move is a typical session for Asia. Fantastic. On the 15-minute, we are at the 50 EMA. You know, it's possible that we have a little bit of a trapping volume formation going on here, meaning we've got trapped traders here from yesterday and price has not returned there. That's a good sign for upside. So as long as price doesn't return there, we're kind of okay. It really could come all the way back down to here. If it did do that, that would be creating the W shape. So I wouldn't worry too much even if it came all that way back, but we could just hold above where the initial low of today has been, and that would also be bullish. We may not retrace any further than that. But again, whilst we haven't yet broken the initial low of the day by the end of Asia, we also haven't broken the initial high of the day. So what you're looking for in UK is to see which one of those two levels, these two white levels here, which is sitting at 42,140 and 42,630-ish. We need to see what breaks there. So UK will run a slow trend if it's to run a typical session, and that slow trend should break one of those lines. But like I said, if UK runs a slow trend to the downside, it may break this, but it may hold this. And if it does that, I'd be looking in the US session changeover, so towards the end of UK into US, for a W formation to complete. And that's where I would feel like we're going up from here, because like this doesn't look very neat on a 15-minute time frame, but essentially if all of that happened, it would be creating a 1 hour W. And remember I said to you, I don't like how the 1 hour is looking, because if the 1 hour is going to get a W, more needs to happen to form the second side of it. And UK might be the session that does that. So I'd be looking out for that. If we don't come back for it at all and price just breaks above the initial high of the day, everything else I said earlier still remains. That we would look for that break, would look for a retest, and then we would assume upside from there. But ideally, if we do break it, we want to see them destroy those shorts that are sitting there. That's the only real thing to worry about kind of right now. However, in saying all of that, if UK runs the trend and only runs it up to these shorts, then the US might bring us down. So yeah, definitely, like I said, I've said it probably 50 times in this video now, but 42,900 is the area to watch for now. Break and retest, upside, rejection, further downside, and then the rejection to the downside would have a fair few levels that it needs to break if we're going to do anything nasty. So I am still bullish, essentially. Like I'm in long positions. I haven't closed them because of the 4 hour consolidation. It hasn't given me enough reason to close any longs. I don't have a short yet, so I will be looking out to get a short position if I get the right signals. And if I don't get the signal, I'm okay, because I will just stay in my long position. But I just want to quickly go over Ethereum. Before I do, smash that like button if you learned something new in this video, and let's talk about ETH. So with ETH on the daily time frame, we're in this vector candle right here. That's why we're struggling, because we're at the halfway mark of it and we're trying to recover and push through it. Essentially, this is a little bit of an M formation. It's not a perfect one, but we're still above 50 EMA on the daily time frame. Above 50 EMA, we're bullish, nothing to worry about. So, you know, we'd have to start coming down and breaking below the 2140 kind of area to flip bearish. But the struggle, you know, the consolidation that's happening, to me, it's just a typical consolidation that's happening because we're in that daily time frame vector zone. But if we go down to the 4 hour, on the 4 hour as a retail pattern, this looks like a break and retest, and we're above the 200 EMA. So that's pretty positive for ETH. The candles aren't giving me anything though. That's the only thing. I want to see some volume come in. Again, we're under the 50 EMA. So it's a no trade zone between 250, no trade zone. Price needs to break through that 50 EMA with some strength, with some volume, and then I would say we're going to the upside. But what I'm watching more on ETH is not so much the USDT pair. I'm really kind of more interested in the Bitcoin pair, because if the Bitcoin pair does this, then the USDT pair will fly. And this is more important. Where price is settling in ETH BTC is in a previous unrecovered vector candle. Now, before I show you that candle, the problem is we are creating lower lows. So not good, okay? We're creating lower lows on the BTC pair and we're under the 50 EMA. This is the daily time frame too. So on a macro level, it's bearish and it's not good. In order for this to flip bullish, it needs to break back above the 50 EMA, retest that area, and make a run for the 200 EMA, which will essentially still keep ETH in this really long-term channel that it's been in since September 2022. So, it would really just be a break to the top of the channel, and then we'd have to reassess everything. But you can see here where the price is now. This is the previous candle that was a stopping volume candle right here. And we're back at it now. So if I'm to, believe that our ETH is going to be a good long trade, if we happen to break out to the upside, I want to see the ETH BTC pair turn around as well. If both of them can turn around, we'll have better percentages in our trades. But if the BTC pair is still struggling, consolidating, going down, ETH isn't really going to do anything too amazing. So this is the most important one to watch in my opinion. I want to see ETH daily time frame get above and hold above the 50 EMA. So a few things to watch there. We've got ETH BTC, we've got Bitcoin, lower high, higher low, tells you the direction of what's going to happen next. The options on Friday, be careful. It's just a volatility sign. So yeah, again, don't freak out about that. And watch out for those heat map orders that are currently sitting at around 42,900. If you like this video, smash that like button, leave me a comment down below, and I'll see you on the next update.